On the private resources as well, I would have no concern about the sizes, although we're talking a really huge number. But the funding needs could easily come from the very same conglomerate, institutional investors, funds, banks, who are today financing the conventional energy sector. I mean, if PV really comes to 10% of the market shares, there will be a natural shift in allocation of the fundings from the same funds, from fossil fuels into PV. So that's not in discussion. What is important is how fast this is happening. So today, neither the renewable energy assets, which means the plants, nor the clean tech investments are considered an asset class, meaning that institutional investors, pension funds, for instance, are, well, not having this type of investment under their normal asset allocation, except for kind of, well, niche or minor investments. There's a matter of size, there's a matter of liquidity, there's a matter of, well, rating, actually, because this is really important. I mean, you have to rate your investment, you have to have the right risk-return profile. So we see some of the moving, thinking about Allianz or Munich Re. Well, compare it to the total balance they have in the system, well, this is not so much. I mean, for Allianz, I think we're talking, for instance, 2.5 billion on a fund, which is 250. So 2.5 is a lot for us, but you have to compare within the relative asset allocation. The other thing is that also from the large players, so conglomerate, industrial conglomerates, these are not likely to step up the size of the investment in PV an order of magnitudes overnight. So they will make some entries like we've seen in the market. There will be strategic moves, but it's not like all of them come at once in PV and basically bring it to a next stage of growth. It will take time. So we may expect an increasing number of strategic moves. We may expect that basically there will be a gradual shift of this funding, but it'll take time before this is really giving momentum to fuel growth, and therefore you have to count that the industry has to look at the same resources for capital that it has been looking so far. These at least in the short term. So to try to summarize this part of the talk, long-term capital needs for photovoltaics eventually will not represent an issue or a bottleneck, I think, in the longer term. The key challenge for the industry may rather be to keep its development trajectory in the next 5 years, so that growth continues, so that the story is still a positive one. For this to happen, we have some short-term needs. The first, I mentioned that before, is we need to access a larger pool of lower cost of capital in order to finance our assets. Returns in assets are going down. We have pension funds, we have utilities with cost of capital in the order of 5–6%. This would be the ideal investors, even at current cost, at current prices in PV, for making very large installations. But they have to enter into this market. So you have to attract this capital. And as I said before, there is a series of conditions which has to be put forward. We need growth capital for manufacturing. This, I think, is less of a concern as long as there is market, because then investment will follow after that. But one consideration could be, how is the global macroeconomic environment be looking like in the future? So will it be favorable to investment in general? Will there be capital available to finance growth? We also need capital for grid infrastructure. This would deserve a full presentation of its own, but here I just summarize it in one point. We know this is a bottleneck. We don't know where the money is going to come from and who's going to pay for that. And I will repeat it more and more time. We need predictable, sustainable incentives. Meeting these needs basically is largely depending on the fact that the sector will be attractive and that it offers returns to the investor, that the opportunity cost in investing in PV is actually better than investing in other technologies. And we need to have a good story to tell to the investors. So we have to show the capacity of the industry to grow. There has to be a good perspective. There has to be a reason to actually enter and step in photovoltaics. Once again, we need also reliability of the regulatory framework. So to come to the closing of the presentation, let's see something about the market today and the macroeconomic environment. First of all, well, how does the market look like? We know that these are, as it was said in the introduction, turbulent times. How sustainable is the growth of the PV market? How attractive it is for companies, for conglomerates, from investors that actually may want to enter the market today. So we know too well by now that this is a business which has a very strong cyclicality, passing from quarters in which actually the demand drops to very low level, to a sudden uptake on the market, and with an industry that can follow very fast after it. The paradigm so far has always been the one to expand capacity to be able to catch up with demand, and this brings to the picture which I show here. These are coming from Bloomberg, and most likely a lot of you will be familiar from those. So if we look in the production capacity, this is more than twice any of the best outlooks for demand. There are also too many players. So if we do a Pareto graph, like you see on the right, of the manufacturers of PV cells and modules, we're something like 150 players, and it takes 40 of them before we come to 80% of the supply. So there are by far, this is really a highly fragmented industry. Also, the dynamics which we have are such that the companies have increasing financing needs for a very fast growth, and players are also, many of them are highly leveraged. So, well, it's a situation that can put them under pressure. And when you have longer time at small margins, you also start to wonder, like a lot of people are doing today, well, will we see a rebound of the demand as soon as the prices are going low enough, or will there actually finally be a shakeout? And how is it going to be looking like? Will we see mergers and acquisition? Will we see simply companies dying and a lot of companies going out of the market? These are scenarios, but it's worth discussing, I think. So if we want to thinking about potential M&A activities, because this is related to the business model, I would like to show what have been the recent M&A activities in photovoltaics, because it's giving us some of the hints looking forward. So most of the transactions are actually small cap intra-market acquisition. Here, these are by month, so some of them are also put together. I only put ticks on some of the largest ones, actually, which are known. But I mean, some of these are strategic acquisition to get new channels, to get competencies and technologies. Most of them are actually in the 50 million tag range. These are not very large acquisitions. There's a couple of landmark transactions above the billion range. These are always from, you know, external conglomerate trending to enter photovoltaics. So far, we haven't seen yet any sign of real horizontal integration. And by that, I mean companies who are competitors that eventually get together or consolidate, like we have seen sometimes in semiconductors, in order to create a better cost structure of a new company. Why is that? That will be a question, and is it going to change in any way in the future? Well, the current industry business model, I think, is determined, well, this is one possible explanation, is determined by subsidy curve on one side and a very large price elasticity. It means that in the environment we're living, the ability to grow rapidly is actually a source of competitive advantage. And it's all related to break-even capacity, to cost, and you name it. Now, growing inorganically by acquisition, well, required times and is expensive. You typically pay premium. And with the technology moving forward, you may well be better off just by adding new capacity to your own line. But then again, you're exposed to larger investment, you have to compensate them. So it's a kind of feedback loop that really stretches the competition. But it's a resilient model because of strategic reason. And how long it will pursue is determined by how far, how quickly the companies will be able to cut their cost to lower the price to a point where they can actually rebound demand. This was really the model in 2008, 2009. We had already spoken once about there would be a big consolidation. It didn't happen. Companies were able to cut costs. The margins were down to 5%, and after 6 months, we're back up at 30% for the top market player. So, well, this is the situation so far, but I mean, we see if it's not going to be this cycle, it's going to be in another one. The microenvironment is really likely to put the model under more and more pressure, and sooner or later, well, it may lead to significant consequences. And if it enters in crisis, we would eventually experience a significant consolidation wave. Now, how is this going to be looking like? As I said before, we cannot say. It's sure there will be significant opportunities for strategic entry in the business, and this will finally change entirely the shape of the photovoltaic industry. For this to happen, the market has to be attractive enough. There has to be a perspective of growing. I mean, you don't do acquisition when the market is still going down. If all of this happen, there will be really a new phase of growth, and as I said, a lot of things may change in PV from the business model point of view. This brings to the second last slide. So if we look in a macroeconomic environment, this is also important if we're thinking about how attractive this market may be. Because, well, let me make a couple of considerations just to come to one bottom line. In the last 30 years, we've seen a period of unprecedented growth. You see it in all the introduction of economic books, etc. In the 1980s, consumption was stimulated by asset inflation, so it grew up in the 70s. Interest rates were going down. People found themselves rich and with the possibility to invest all of a sudden, and so there was a booming consumption. When this was, basically this resource was thinning down, we started actually to leverage the market, and there was this hyper-financiarization and structured finance. So there was a lot of capital available for investment. Technological boom may have looked significantly different in a different economical settings. I mean, we experience this. We experience also what are the downside now of this type of economical system. But I mean, as it goes for the technologies, I mean, also wind and PV market growth may have been different in a different macroeconomical settings. So the question for us is whether it's going to be the same in the future. We're still into this recession. We're not out of it yet. And before knowing how this will affect investment, we need to know the full effects of this financial crisis. So let me just touch briefly on the fact that there are a couple of hypotheses which are plausible, like, for instance, a general deleveraging of the economy, because you have to make the financial system safer. And if this is happening, actually this would impact the availability of capital, easy capital, financial capital, and growth rate would have to be fueled much more, for instance, with the proceeds of your own sale rather than with additional investment. A model like the one, for instance, for venture capital would be put under much more stress, but even the growth of a market like photovoltaics. So this brings me to the conclusion. The financial needs for the tomorrow PV industry are large, but are consistent with the role the photovoltaic is likely to play in the mix in the future. Resources are available, and the issues, and this is maybe a series of points for discussion, is really banally whether the industry will be able to keep its trajectory with the current business model, or if something will have to change significantly, whether the regulatory environment will be reliable, and whether the macroeconomic environment will impact growth or not. Thanks a lot.